Hello, this is Bud Fox with IchimokuTrade.com. This is the April 2017 newsletter, and my segment is going to be showing you how I trade small cap momentum plays using the crosses, or the longer term multi-time frame support resistance levels. First things first, let's get the disclaimer out of the way. Please read through the disclaimer. We are not financial advisors. If you want to trade live, I would consult with a professional advisor. All the situations and examples we are using are for educational purposes only. Again, we will be using TradeStation charting. I will give you a few more minutes to read through the disclaimer and the risks of trading. Again, everything that we are doing is just for educational purposes only. We are not saying to buy or sell anything. Okay, now let's get to business. My first example is going to be symbol CVRS, Catalyst Pharmaceuticals. Now, let's do a little background about how we do these small cap momentum plays. We're looking low risk. What does that mean? Well, we want our risk to be defined. We see these stocks sell down hard, they consolidate. Then we want to get the move up. So, what are we looking for? Well, if you look at this stock, it has sold down, and we have a wall of crosses spanning over months. Now, you could see here, right here, we broke above the crosses on volume. We did it again here. However, we didn't make it. Why? There was something in our way. The daily SKB was blocking our way. Okay, these are daily charts, by the way. So, it was still good enough for a day trade if you could get in at the cross. Cross was 114. Daily SKB is 126. It's a 12-cent play, but on a dollar stock, that's not bad. But again, if you are getting in here, you have to make notice that you are, well, you're in the cloud now, but you do have that SKB there. So if we fast forward to the future, cloud starts to thin out, we start to get above it. Right here, we close at 117. We are above the crosses. Again, close at 117 above the crosses. We stay above the crosses. Right here were the lows. It's at 108, so you could stop out at 106. Never broke there. Now, we come here. Here's our big day. We got above average volume. Now we've got crosses moving up within the day. And guess what? Next day. So if you didn't get in this week, you could have gotten in here. Boom, you gapped. 25 million shares. Stock probably does 250 a day. More importantly, we've got crosses now moving up. Now the next question that everybody's going to ask is, when do I get out? Where do I get out? Risk management is up to you, folks. I hate to break the news. There's no crystal ball. There's no secret sauce. And yes, you're going to have to use your brain a little bit if you want to trade and be successful. So, it's up to you. My philosophy for the last 20 years has always been what I call, you got to feed the beast. As it goes up, you got to de-risk. You have a gap like this, okay, closed 117. The next day, you hit a high of 177, 60 cents on a $1.17 stock. That's 50%. You got to be selling out of half to most of that position. Now, you let it settle out. Now we have crosses forming again. Crosses have moved up. That's something you always want to look for. Okay? As the crosses, as the dots move up with price, that's good. That means that the trend is holding. Here you have a double whammy. You have the daily Cajunson lining up with the crosses. So on this day right here, okay, you have a chance to reestablish the trade. So you've already made the number one. You got in here low risk, great trade. Now it's giving you an opportunity to reload at 144. You can do that. You could stop, I don't know, 5, 6, 7 cents. We hold, and boom, we go up again and again and again. And we get as high as $2 from 145. So on a percentage basis, not as good, but again, you're making 50 cents on a dollar stock. How do you get out of this? I'd be legging out. That's all I can say. If you want to trail out, you can trail out. No crosses have come yet. You can use the dots if you want. You would have gotten into a little trouble here in this area right here. But otherwise, the trade is still looking okay. As far as Friday's close, you're well above the Cajun. You don't have any dots or crosses. On this bar, I'd like to see what happens. I'd like to see these crosses potentially move up to here, and then I could buy another pullback. That could be a number 3 entry. If you played the 1 from here to here, played the 2 from here to, say, here, you get another pullback. If you get crosses lining up there, that could be a number 3. Let's go to our second example. Symbol is CVRS, Corindus Vascular Robotics, Inc. Again, sold down. Start to consolidate. We have crosses right here. Swing long, resistance, support, 52, 53 cents. We closed at 55. We closed at 55. We closed at 54. Even if you're not in it here, you get the gap. Gap on volume. Now we have another wall of crosses forming in the 58-cent level. So it's not really a big deal. You're talking about an extra 5 cents to pay up, but even if you do pay up, you can still get in here. We're looking for the high volume day. Okay, we have an increase in volume here. So by this bar, if you hadn't gotten in here, you should have gotten in here. You should definitely be in by this bar. Then we have an extremely big volume day with a gap up, with the cloud breakout. This thing goes parabolic on us. So again, you're talking about a trade from 60 cents to about $1.20. That's a double. That's your number. That's your leg number 1. Now we pull back. Now here we have something that shows up a lot. You're going to have the crosses move up. That's great, bullish. Right below it is our daily Cajun. So you kind of have 2 levels there, 101 and 96. I see this a lot, so a lot of the times I will use both of those levels as entry points, so I may take on a little more risk. But if you've been in this number 1, you have the profit to justify it. This does happen to hold the crosses. Price starts to move up. Crosses move up, very bullish. So this number 2 leg, you get in at, say, 103. You could ride this thing to 150. That's another solid trade. Well, let's just even say here. Let's say 140. Okay, after a couple of days, now you start to see these crosses, and then right here on this bar, no good. You sell down, you close here, below the wall of crosses above you. Now, we pull back, leg number 3, daily Cajun again, seems to hold, you get another rally. However, there's no crosses here, so I'm not going to take something like this. If you've been in the number 1 and you've been in the number 2 and you like to play the high risk game, you can go for the number 3. But again, I don't see the crosses, so I'm not playing it. Let's go to the next one. Okay, IDRA Pharmaceuticals, symbols IDRA. Same scenario, sells down. There isn't a lot of consolidation before it starts to break above the crosses right here. But it's the same similar pattern. You have a sell down. Whoever's out of the stock is probably out of the stock. You have price breaking above the crosses, so your risk once again is defined. We're low here. You could get in here, and it's just an easy ride up right here. How do you get out? Well, again, you can layer it out. You can look for resistance points. Daily SKB is certainly a point of resistance. Dots moving up, crosses moving up. So by here, you should be probably out of, I would say, 80% of the trade. If you did want to hold, I mean, right here, this cross holds, so you could maintain it, although we did close below it here. Then we have another blast up. Here, pulls back. It's a cloud breakout, pulls back to a wall of crosses here. Now, what I said about the last example, that daily Cajun. Okay, you got 2 little levels here. Okay, so we hit this level, held, and broke it, tested the daily, and bang, another big move. So you could have made the 1 to here. You could have bought back in here and made the number 2. This still looks good. It's still closing above dots. I'd be out of this thing. And ideally, again, I would love to see a pullback somewhere in this level with the crosses lining up with hopefully the daily Kajinsen or the Tenkan-sen. This has been riding up the Tenkan-sen, these crosses. So just to review a few things. Why do these momentum plays work? Number one, they're low risk. Your risk is defined by the crosses plus an offset of 5-10 cents tops, as we have seen with our examples. Number two, because they have sold off, most of the people that are holding this thing and want to sell are probably out. So whoever's going to move this stock up is probably going to be new buyers. This is momentum based. We've seen a lot of gaps with volume. That to me indicates momentum. We've also seen price breaking crosses. That also indicates momentum. So right now, let's go to some examples that we are looking to, that we have an eye on right now. OPG and OpGen. Okay, sold down hard. Okay, it made a little move right here. Here you have the cross, breaking above the cross in the beginning of the year, January. Made a nice move up from, say, where are we? 119 to about 180. Failed the cloud breakout. Now we're below this gargantuan cloud. So it could be a while before this thing goes, if it goes. But we noticed a couple days ago, breaks above the crosses, and now it's holding above the crosses, so I am keeping my eye on this one. Next one. Same type of deal. This had a wall of crosses as resistance at around $3. Eventually, drug stock, they did a secondary. That's something you may want to wait for. You like to see that earnings are out. Any secondary is out. And tanks, consolidates. We have a cross here at 97, closed at 101, that's above it. Cross at 97, closed at 99, that's above it. If you also notice volume, 200, 400, 300. We break above the cross, 1.7 mil, 1.4 mil. So that's definitely something to watch. Again, it is below the cloud, but you got room here. You got that daily Kajinsen here. You got the daily SKB here. So you've got some room to go. Last example that we are looking at, MBRX, Molecular Biotech. Same type of deal. The crosses have been holding it down and holding it down and holding it down. I think this stock was like 650, trading around $1.10. It's consolidating. There's a wall of crosses here. I would like to see it go above, and then we can start thinking about what to do with this one. That wraps up our session for today. Again, we like to trade these crosses, these cross breaks on momentum plays. We like to see price breaking cross. Then we like to see the crosses move up. We can define our risk as a wall of crosses plus a little bit of an offset. And that's about it. If you have any questions, you can reach us at info@ichimokutrade.com. You can also give us a call, 646-863-9620. Thank you very much, and have a good day.